Hello everyone. First, let's discuss what are all the important things that's going to define this week's Indian market, and then we can discuss our regular pre-market report for today, 11th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. There are four important things we need to monitor this week. 1. Earnings. 2. FII selling. 3. India inflation, and finally US inflation. First, earnings. There are 4,500 number of stocks listed in NSE. Out of that 4,500, this week more than 50%, 2,500 number of stocks is going to release their earnings. And in that, there are some Nifty 50 stocks also due to release like ONGC, Hindalco, Shree Cement, Aker Motors, etc. Hence, we can say by the end of this week, most analysts will understand the fundamentals and fair valuation of Indian market. So far, the results had been really mixed. Let's see. Then the second, FII selling. We know Indian mutual fund is getting more money every month through SIP, which is positive, but still in the cash market, FII net sold for 31 sessions straight without missing a single session, with an average net sold value of near 4,500 crore rupees every single session. It's now kind of alarming and started to play a psychological issue in the Indian market, though DIA having some firepower. So if FII continued their selling spree this week also means, as I said, despite the Indian mutual fund support, it's a huge psychological negative. Just for info, even on last Friday, FII net sold for 3,400 crore rupees and DI net bought for 1,750 crore rupees. Third, tomorrow in the aftermarket hours, India's consumer inflation is due to release. As per RBI guidance, in the last MPC meeting, they said they are expecting a food inflation spike due to the flood across the country. So basically kept the interest rate unchanged for the past 20 months despite US cutting the interest rate. The next RBI's interest rate decision MPC meeting is between 4th to 6th December. Hence, for performing the first India's interest rate cut, this inflation and the bank's deposit growth are the two important factors. Now, the bank's deposit growth and credit growth started to become balanced. Hence, this inflation number is the crucial. At present, the October month inflation, as per analysts, they are forecasting it to around 5.8%. So, by chance, if the inflation number comes above 6%, then possibly this will add fuel to the FII selling fire. Then the final one, US inflation. As most of us know, last week Fed cut the interest rate by 25 basis points, and on top of that, Fed chairman spoke very dovish. So market at present expecting another 25 basis point interest rate cut in the next FOMC meeting, which is due on December 18th. Even on last Friday, CME FedWatch tool showed that 76% probability Fed will cut the interest rate again in the upcoming December meeting. Hence, for that, this October month inflation, which is scheduled to release on Wednesday night, is very, very important. And Indian market will react for that on the following Thursday. So basically, I expect these four things expects to drive the market this week. Anyway, now moving to our regular stuff. Last Friday night in US, because of this another high rate cut probability, S&P 500 for the first time it crossed above 6,000 mark. However, final hour profit booking pushed it down slightly, but still closed positive 0.38%. And then Dow Jones increased 0.59%, whereas Nasdaq closed flat to positive. In case of US VIX, after August, for the first time, it dropped below 15 mark. In addition, even now, US future market trading further positive. So global momentum is really good. However, that positivity was not seen entirely in the Indian ADR, but to some extent, we can say it transferred to IT stocks. If required, please pause and have a look. As it is in ADR, only ICICI Bank closed negative, all others closed positive. Despite being closed negative, ICICI Bank ADR arbitrage at present it's flat, and the same for HDFC Bank. However, both the IT stocks indicating positive trade, especially Wipro is positive because as per the news, Azim Premji's trading and investing firm added additional 1.6% Wipro shares in their portfolio. And also there are some AI related positive news that Wipro are collaborating with Google, which all okay, but the problem is on Reliance Industries. On Friday in Indian market it dropped 2%. On top of that, in GDR also, it was down near 2%. So at present, showing the negative arbitrage of 1%. Regarding the reason, in MSCI index, unlike HDFC Bank, ICICI Bank and Infosys, Reliance weightage was increased and it expects to cause an estimated fund outflow of near 200 million US dollars, hence the negativity. So that's all about the dollar market. Let's look at the Indian market related info. As per open interest volume, still in the index future market, FII is holding 76% short position and similarly DII 55% and proprietary traders 63%, all holding index short. On the other hand, it's just retail traders who is long. Then in the options market, FII bought high number of put options and proprietary traders sold massive call options. All detailed analysis I added in the YouTube community page. Basically, in the derivative market, both FII and proprietary traders, as per the present open interest analysis, will make money if market goes down. But please be aware, we cannot rule out the bounce back, and in those cases, they will adjust their position. Then, regarding stocks in focus, during weekend, Tata Motors and Asian Paints released their earnings. Both of them not good. But please note, in the last 3 months, Tata Motors corrected 30%. Anyway, those stocks will be on focus. In addition, JSW Steel will also be on focus because last Friday, Indian Coal Ministry terminated some of their coal block development project. As a summary, US market closed positive and US future market also trading positive. So global momentum is good, but can Indian market turn around? Only time has to tell. On Saturday morning, GIFT Nifty closed at 24,117, equating it with the spot market. For now, it's indicating a gap down opening of 80 points. Please note, it's just Saturday morning status. Maybe it might change today morning. Regarding the things to look out, ONGC, Britannia Industries, Hindalco, Shree Cement, Bank of India, Bajaj Consumer Care, NMDC and Devyani International are some of the major Indian companies' earnings results are scheduled released today. About macro, there is nothing that I'm aware of is scheduled released today. Coming to technical, last Friday Nifty opened flat, but on the positive side it traded within a 100 points range after a long time but closed below 24,150. Thus on the daily chart, Nifty formed a bearish candle with minor upper and lower shadow, indicating a choppy movement in the market. In addition, at present it's trading below 10, 20, 50 and 100 day. All are worrying signs. However, hourly momentum indicator having some positive crossover. Hence, in the near term, Nifty might recover towards 24,500, but a dip below 24,000 could lead to a market correction towards 23,800. Then, in case of Bank Nifty, it opened 50 points gap down and underperformed and closed around 51,500. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candle. In addition, it continued lower high, lower low formation and also dropped below key moving averages like 10, 20 and 50-day exponential moving average and again failed to hold above 52,500 zone on a closing basis. All indicates the increase of negative bias. However, here also there is a divergent signal between daily and hourly moving averages. Hence, we can expect the range bound price action to continue within 51,000 to 52,500. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,200, with maximum new call option writing at 25,000 strike, followed by 24,800 and 24,200. On the put side, the maximum open interest was at 23,500 strike, followed by 24,200 and 24,000, with maximum new put option writing at 24,100 strike, and then 23,500 and 23,900. Thus, from options data, it's indicated that 24,000 is likely to act as the immediate support, while resistance is at 24,200 and 24,500 level. So, that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.